Large and mid-cap funds give you the best of both worlds. On the one hand, you get exposure to high-performing mid-caps, and on the other, you have the safety of India's biggest companies. Now, these funds invest at least 35% in large caps and a minimum of 35% in mid-cap stocks. The rest can be anywhere the fund manager likes. And if you check their funds, they're ahead of most diversified funds in the past year. The average returns of large and mid-cap funds are higher than flexi-cap, large cap, and ELSS funds. So we thought, why not compare the three most popular funds in this category? In this video, we will compare large and mid-cap funds from Motilal Oswal, HDFC, and SBI Mutual Funds. But before we begin, a quick reminder. You're watching this video on ET Money's English channel. हमारा एक हिंदी चैनल भी है जहाँ पे ये सारी वीडियोस आप हिंदी में देख सकते हैं. And if you are or know someone who wants to understand the basics of finance in a quick and easy way, we have a channel called as 5-Minute Finance. The link of the channel is in the description, so do check them out. Another thing before we begin, we will not be telling you which fund is the best among the three. Instead, we will analyze their investment style and performance. And based on the data presented in this video, you will be definitely be able to choose the fund that best suits your needs. Alright, let's begin. Before we examine the funds, I want to explain why and how we selected the three schemes. First, we filtered out smaller funds. So any fund with assets under management of less than 4,000 crores was excluded. Thus, we were left with 16 out of 31 funds. Next, we looked at the 1-year AUM growth of these funds. Now, funds that have higher AUM growth mean investors are pouring money into them. Then, we shortlisted the top 3 funds in our list. Motilal Oswal Large and Mid-Cap Fund grew by 170%. HDFC Large and Mid-Cap Fund saw a 118% rise in the AUM. SBI Large and Mid-Cap Fund doubled in size in 1 year. Now, let's start our analysis by looking at the investment style of these schemes. Understanding the fund's investment style will help set the right expectation. An aggressive fund will give you high returns when markets are doing well, but it will also fall more when markets correct. Similarly, a fund with a conservative approach may not top the charts when the markets rally, but it will stand out when markets fall. Now, we will look at different parameters to understand the investment style of the fund. Let's first start with the large, mid, and small cap allocations. Historically, if a fund has a higher allocation to large caps, we can consider its approach conservative. Similarly, if a fund invests more in large and mid caps, we will call it aggressive. Now, as discussed earlier, large and mid cap funds must invest at least 35% of their assets in large cap stocks and 35% in mid cap stocks. The remaining 30% can be invested anywhere the fund manager likes, including small cap stocks. Now, we looked at 5-year data for these funds. As you can see, historically, HDFC Large and Mid-Cap Fund has had a large cap allocation of more than 50% in 4 of the last 5 years. On the other hand, the SBI Large and Mid-Cap Fund has increased its allocation to large caps from 36% to 42% in the last 3 years. But there was a surprising trend with Motilal Oswal Large and Mid-Cap Fund. This fund has consistently decreased its large cap allocation in the last 5 years. The fund's large cap allocation was 57% in June 2020, and 4 years later, it is now at 37%. Now let's look at the mid-cap allocations. Now for SBI and HDFC Large and Mid-Cap Funds, the exposure to mid-caps has been between 35 and 40%. This trend is similar to other funds in the category. Motilal Oswal Large and Mid-Cap Fund, on the other hand, didn't have a high allocation to mid-caps in the past. In 4 of the last 5 years, its mid-cap allocation has been 40% or lower. Now, it's only recently the mid-cap allocation has gone up to 47%. Now, there could be 2 possible reasons for this. Either the fund style has changed or the fund manager thinks mid-cap valuations are attractive. Lastly, if you look at the small cap allocation of these funds, Motilal Oswal and SBI's large and mid-cap funds have a 15% allocation to small caps. HDFC's fund, on the other hand, has a 12% allocation. So, if we combine the findings from these data points, HDFC Large and Mid-Cap Fund is clearly biased towards large cap. It has allocated more than 50% of its capital to large caps. SBI's Large and Mid-Cap Fund follows a more balanced approach. It has allocated around 40 to 45% of its assets to large caps and the remaining 55 to 60% to mid and small cap stocks. Motilal Oswal large and mid cap funds investment style has changed drastically in the last few years. The fund has become more aggressive with over 60% allocation to mid and small cap stocks. Alright, next let's look at this fund's portfolio turnover ratio. A portfolio turnover ratio is a useful metric that tells how frequently the fund manager buys or sells the stocks. A ratio of more than 100 means that the entire portfolio was changed in the last 1 year. But do note that there is nothing good or bad about a high or low portfolio turnover ratio. It helps you to understand differences in the way fund managers manage your money. Now, as of June 2024, the HDFC Large and Midcap Fund had a turnover ratio of just 8. During the same period, the category median turnover ratio was 72. So the difference is quite huge. Even historically, HDFC has maintained a low portfolio turnover ratio. This means the fund manager follows a buy and hold strategy and strongly believes in his bets. Now the portfolio turnover ratio of Motilal Oswal's large and mid-cap fund is 86, which is slightly above the category median but still not very high. However, if you look at the historical data for this fund, then this ratio has risen significantly. It increased from 20 in June 2020 to 86 in June 2024. This could be because the fund has reduced large cap exposure and allocated more towards mid caps recently. Lastly, the turnover ratio of SBI large and mid cap fund stands at 56. This is lower than the category median of 72, but it's not as low as HDFC's. Now, if we compile our findings from this analysis, the fund from HDFC has a significantly low portfolio turnover ratio. This means that the fund manager believes in a buy and hold approach. The funds by SBI and Motilal Oswal, on the other hand, have a medium portfolio turnover ratio. Alright, now let's look at our last metric, which is the number of stocks in the portfolio. A high number of stocks implies a diversified portfolio. So the impact of any one stock on the overall portfolio is limited. This approach leaves room for errors. Even if a few stock bets go wrong, they will not severely impact the portfolio. However, if this diversification is overdone, it can harm the portfolio by diluting its returns. On the other hand, a lower number of stocks implies a concentrated portfolio. This is precisely the opposite of a diversified portfolio. Here, the allocation of a few stocks is higher. So if any particular stock moves, it can significantly impact the overall portfolio's performance. Now, as of June 2024, HDFC's large and mid-cap fund had 191 stocks in its portfolio. This is the highest among all the large and mid-cap funds. The category median for the number of stocks is 73. Of the 191 stocks, 64 are large caps. The remaining 127 are mid and small cap stocks. Having 64 large cap stocks out of 100 is on the higher side. This can possibly dilute the fund's performance. Now the number of stocks in HDFC's portfolio has been on the rise. It had 51 stocks in 2020 and it has gone up by around 4 times. Motilal Oswal only has 29 stocks in the portfolio. This is significantly lower than the category median of 73. It means that the fund manager here has decided to form a concentrated portfolio. Lastly, SBI's large and mid-cap fund has 80 stocks in the portfolio. This is close to the category median. So from this, it looks like HDFC large and mid-cap fund has an over-diversified portfolio. SBI large and mid-cap has a moderately diversified portfolio and Motilal Oswal has a concentrated portfolio. Now in the next section, when we look at the returns and risk of the schemes, we will see how these differences in investment style affect their performance. But before we proceed, if you're still watching this video, then I'm sure you're finding the content insightful. We do a lot of research and create content that you can use to make smarter investing decisions. So I recommend you subscribe to our channel and press the bell icon so you never miss a video from us. Here we compare the performance of the 3 funds against different benchmarks. First against the category average, then we will compare the performance with the Nifty Large Midcap 250 index. Then we also made a custom portfolio of 50% large caps and 50% mid caps to examine the fund's performance. We took this because this is another way to invest in large and mid cap stocks. Now, let's look at our first performance metric, the rolling returns. Now we looked at 5-year rolling returns between August 2014 and August 2024. But there was a slight problem. We didn't have data for Motilal Oswal Large and Midcap Fund as it was launched in October 2019. The fund is less than 5 years old. Now, compared to the performance of the other two schemes, the SBI Large and Midcap Fund performed best in the group. With 5-year median rolling returns of 14.78%, it not only outperformed HDFC Large and Midcap Fund but also the other three benchmarks. However, the HDFC Large and Midcap Fund was a laggard here. It generated a return of 13.39%, which was the lowest in the group. Now, to compare the performance of Motilal Oswal Large and Midcap Fund, we decided to reduce the rolling returns period. We looked at 2.5-year returns between August 2019 and August 2024. Now, 2.5 years is not a good enough period to compare the performance of equity funds. But because of its limited performance history, this was the best we had. Now, if we look at the data, the HDFC Large and Midcap Fund, which was a laggard on a 5-year rolling return basis, topped the chart here. It delivered a return of 24.17%. The next was Motilal Oswal Fund with nearly 23% returns. The third in the line was SBI Large and Midcap Fund with 21.47% returns. Now, what's interesting is that all three funds here have outperformed different benchmarks that we considered. So, from a return perspective, these three funds are definitely a good option if you wish to invest in large and mid-cap stocks. Now, as we pointed out earlier, HDFC Large and Midcap Fund, which was a laggard when we checked 5-year rolling returns, topped the chart here. That's because the fund's performance has possibly turned around. Now, to see if that's the case, we looked at the trailing returns of this scheme. We looked at the 1, 3, 5 and 10-year trailing returns of these funds. Now, it's very difficult to compare so many numbers. For ease of comparison, let's convert this into ranks. HDFC Large and Midcap Fund ranked 5th in terms of 10-year trailing returns. However, based on the last 1, 3 and 5-year trailing returns, it is in the top 2. So, the short-term returns of this fund are clearly better than the long-term returns. Next, we look at Motilal Oswal. Although the fund is new, it has been in the top 2 based on the last 1 and 3-year trailing returns. SBI Large and Midcap Funds ranking has slipped recently. It ranked 2nd based on 10-year trailing returns. But in the recent years, it has ranked either 5th or 6th, which was at the bottom of the group. Now, let's combine all the analysis we have done so far. Now, if we combine the performance of data with the investment styles that we analyzed in the previous section, we can make some observations. First, the recent performance decline in SBI's fund could be because of its bets not working. We say this because we did not see any major change in its investment style in the previous section. Similarly, Motilal Oswal's large and mid-cap funds' aggressive mid and small cap allocation is helping it generate good returns. Now, what's surprising is the recent outperformance by HDFC's fund. Despite a higher large cap allocation, it has generated better returns. Alright, having examined the returns, let's examine the risk associated with these funds to see if they are undertaking higher risk to generate higher returns. Here, we look at the monthly returns of Nifty 50 over the last 5 years. Then, we shortlist the months where it generated negative returns. This way, we came across 20 months when Nifty 50 generated negative returns. We then compared the performance of different funds with Nifty 50 and calculated months in which the fall was less than Nifty 50. The SBI Large and Midcap Fund had better downside protection in 15 out of 20 months. This performance was second only to the custom portfolio we made using 50% large cap and 50% mid caps. Next, Motilal Oswal's fund had better downside protection in 14 out of 20 months. This performance was in line with the category average of large and mid-cap funds. HDFC Large and Mid-Cap Fund has the poorest downside protection. It fell less in only 11 months, which is the lowest in the entire group. This downside protection data surprised us, especially for Motilal Oswal and HDFC Large and Mid-Cap Fund. Now, in the previous section, we saw that Motilal Oswal has a concentrated portfolio with a higher allocation to mid and smaller companies. Intuitively, this combination should yield a highly volatile portfolio. But based on the data, the fund has done better than expected. Similarly, in the case of HDFC Large and Mid-Cap Fund, it is a large cap heavy and has an overly diversified portfolio. This combination should have resulted in a less volatile portfolio. However, here, this fund has the highest volatility. Now, if we summarize our analysis, the HDFC Large and Midcap Fund seems to be turning around its performance lately. It has performed well in the last 5 years. However, these returns are accompanied by higher than expected volatility. Motilal Oswal Large and Midcap Fund has delivered good returns. With the returns, it has also offered good downside protection. Lastly, the SBI Large and Midcap Fund's long-term returns have been impressive. However, lately, it has started to underperform its peers. If we look at the downside protection of this fund, it was the best of the 3 funds. Now, based on this analysis of returns and investment style, we leave it up to you to select a fund that suits your requirements. I would love to know which fund you find best. So do comment down the fund that you found the best. With this, we have come to the end of this video. I hope you found this video useful. And if you did, please don't forget to share it with your friends and family. I'll be back soon with a video soon. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.